So today we're going to be breaking down Euro Australian dollar. It was pretty easy to take this trade and hold it for its longevity or get numerous entries. I had been posting about it on my Instagram for quite a long while, around this time here, around January, the end of January. And if you had followed it, you would have got a nice trade. It isn't yet all finished, but it's coming to the point where price is starting to consolidate. But we're going to break down the fundamentals and the technicals. Personally, I am a more majority fundamental trader. I just find it easier to link that towards the charts and how and where price is going to move. But without any further waffle, let's get straight into the explanation. So price was actually bouncing off two supports for a very prolonged period of time, and that was because there was no driver, there's no specific driver, and COVID was still a worry. Europe wasn't in lockdown, but there was still lurking COVID issues. Around this time is when Australia hinted or enticed that they were cutting rates, and so price plunged upwards. The rate decision wasn't until November, and as you can see, price actually broke this trend line here, and the news about the rate cut didn't actually happen or have much effect, and at that same time Europe then suffered COVID lockdowns part 2. As you can see, this is around November time, happened throughout the continent of Europe, and it's still happening right now. Obviously we're coming towards the end of that lockdown, we have more direction for Europe, but there is still lurking issues. So we have this push downwards. This support was held once more, but eventually, as you see, it could not be held any longer, and that's just because there was no good drivers for the euro. There was no good news, there was no bad news for the Australian dollar until we actually hit this support here. So on the 4 hour, you can clearly see that once we hit the support, we had a very large jump up. In fact, it was around 200 pips, 200 or more pips, and that was because of the European vaccine news. So that's good for the Europe, because they're talking about vaccinations, as well as this is a key level. It's a technical pivot point, or a daily support, daily supply zone, whatever you want to call it. So we have that, and we have the fundamentals to go along with it. It made sense for price to push up, and then we also had, for the Australian dollar, we had Australian-China conflict, which was obviously bad news for the Australian economy, because Australia relies on China for its exports. So now that we have that, price did continue upwards. If we just draw a little trend line here, price did continue upwards. However, it didn't last long, and that is specifically because there was no reason for it to go any further than that, because the Australian-China conflict wasn't as bad as the outweighing effects of COVID. So we did see a nice drop. We had a nice retest right here. Getting a sell opportunity here was not hard at all. Also, I like to use Fibonacci, so if you do like to use Fibonacci, there was more than one Fibonacci you could have here. We have this from the highest point of the high of the last move of this move, and it links up with the 382 quite nicely. We also have this Fibonacci here, and as you can see, it links exactly up with the 618. Perfect Fibonacci, and so we have two sort of areas. It's also respecting the 0.5, so we have two Fibonacci that work and link up with the price action here. The fundamentals align, and so it made sense for price to continue downwards. Again, the fundamentals specifically around this date was the poor Europe news with COVID. There were specific countries like France and Italy very bad dealing with the COVID scenario, and Australia was in a great position economically, as well as they announced flights to start in July around this period, which was an amazing thing because Australia and New Zealand are very strict on flights, so that is a good thing for Australia, as well as New Zealand, and obviously bad news for the euro. So at this rate, you could have had this nice channel forming. I like to use trend lines. It just makes me see the image or the sort of direction of price much easier, and you could have had this on the bottom. We haven't got down to here yet, so it would have made much sense to have this bottom channel or bottom trend line, but you could have had it. And quickly, I'm just going to draw out all the support and resistances that were needed or could be used in this scenario. So we have, starting with, we're going to start from the very top. And we're going to do the lines first. So then there was one here. Pretty easy to understand. If you do not see where I'm coming from, then you can just look left, and the supply or support zones are clearly evident, but that isn't the only ones. There are more. On the 4 hour, I like to use the dashed line. So if we just use the dashed line very quickly, and then I'm going to draw out the rest. So that is all the zones to really worry about. There is one down here again, but that is pretty much all the zones you needed to have drawn out. As you can see, prices now, or the whole format of how price looks and where it sort of supports the whole technical look makes much more sense. So you can see price action sort of actually start respecting levels, and it makes much more sense than just having the technicals. Obviously, you have to pair them together. Even if you're working with fundamentals, you could still be profitable just trading off fundamentals, but the whole point is to use technicals to refine your entry and help you better your win rate. So we've explained this. It was a nice sort of break and retest here, and then price continued downwards, and there was no sort of change in sentiment over here. Price moved very slowly because we're bouncing and breaking through key support levels throughout, and until we got to here. This is the whole point of where I started posting on Instagram. So my first post was during this time on Euro Australian dollar. So clearly we have this support, this channel line here, and also you can draw one to the top, sort of making a channel. So it's sort of like a a pattern of some sort. I don't trade patterns, but there is a pattern there most likely. So the reason for this upwards push was, firstly, the European Central Bank kept policies unchanged, so the rates weren't changed at all, and the focus was then on PEPP, which is the Pandemic Emergency Purchase Program. Around this time, vaccine rollout and distribution and COVID cases was the main focus. Obviously, we had the news from up here that European was getting vaccination news, which was good. Around here, and at this point, it wasn't as much of a driver. So there was still issue or information lurking like that, but it wasn't a main driver. There was no one talking about it. What made this a very impulsive move here was the Chinese cutting production fundamental news, which obviously negatively affects Australia and New Zealand because they rely on China as an exporter. But when it got to this point, that driver was no longer valid. So it didn't make any sense for price to continue upwards because the Chinese cutting production news was no longer valid at all. And so we eventually saw the break of the trend line, a nice free test on the 4 hour, and then a continuation. Now price did start rejecting this support very early, but again there was no change in sentiment, and sellers were very, very dominant, so there was no reason for price to continue upwards or change upwards, so it just continued downwards until it had a very large fall. There was an entry over here that I said to take on the Instagram. There was a very nice Fibonacci you could have had. So we have this 786 level. We also have the 618 level, as you can see, and then lastly we have the 0.5 level here. So there's 3 Fibonacci confluences aligned in the right. At this level we also have the end of the bearish, the sort of third touch of the bearish channel, and we also have the fundamental reason of the Australian dollar no longer being driven by the negative Chinese news. The European situation on COVID hadn't changed, so there was no reason for price to continue up. If it's not going to continue up, it's going to head downwards, especially if the Australian economy is moving forward, doing very well with COVID. Vaccination is improving across the whole of Western world. There is no longer any worries there is still worries, but less worries for COVID. Price is going to continue moving downwards. It clearly did. It broke this support level here. It sort of did a retest, then fully broke it and retested. So you could have probably had a Fibonacci here, links up the 0.5618 level, sort of near the 786, not fully touching, but it is very, very close. If we just zoom in there, in fact you could probably base it off that, and it is the 786 level. And price continued all the way down, but apart from that, it was pretty easy to understand the whole Euro Australian dollar fundamental technical trade. There is no specific driver coming to this level. If I just explain what recently happened, there was no specific driver for this, but this is just technicals playing out. Obviously we had been selling off for a very long time. The price can't always just continue selling off. So price finally respected a support. This is probably the banks getting out of large positions, but also moving the direction so it hits other people's stop losses, just so there's liquidity still in the market. But other than that, there isn't much change. Obviously right now we're consolidating a bit, especially if we look on the daily, we're starting to consolidate. That is because of the whole bonds move. In fact, later today, it may have happened by the time of the release video, but by the time I release this video, but we have Fed Powell, Fed member Powell talking later today, which is very important because he's most likely going to be talking about bonds, or at least be questioned on it because it is a Q&A. So we will have to wait and see for that. If the chances that Fed Powell does actually lean on the bonds, that's most likely going to be bad against risk sentiment. But if he does pushes the way of bonds increasing, then that will be good for risk sentiment, and we will see price probably continue downwards. But again, if he does not push far enough back against the bonds pushing upwards, that is going to be very bad for the riskier assets, and we'll probably see a jump upwards and probably a break of this channel here. But that is it for the Euro Australian breakdown. Overall, there isn't right now any reason for price to continue up. Again, I did just say, talking about the Fed Powell, and that's the only reason. Just before we actually do this, there is actually a nice entry that you could have got up here. Obviously you have the channel as a indication. There is a 4-hour zone here, but also look at this fib, a very nice fib linking up with the 618. So this area here would have been a lovely entry. It did happen on a Monday or Sunday open, so it wasn't the best of times to have an entry. You would have to be looking at the market as soon as it opened, but nevertheless it was a very good entry. But that is it for the Euro Australian dollar breakdown. If you do have any questions, just drop them in the comments below. But other than that, thank you for watching. I hope this helps, and like for more content like this.